What if you woke up tomorrow and your bank account was a graveyard of numbers that no longer bought a loaf of bread? It sounds like a scene from a dystopian thriller, but for millions throughout history, this has been a cold, hard reality. In 2024, the world's total debt hit a staggering $315 trillion, a number so large it defies human comprehension. We are currently living through the greatest credit bubble in the history of our species, and the needle is getting closer to the balloon every single day. When the system finally snaps and the fiat currencies we trust start to evaporate, two titans will be left standing in the arena of survival: gold, the ancient king of wealth, and Bitcoin, the digital challenger. For 5,000 years, gold has been the undisputed insurance policy for humanity. But now, a line of code is claiming it can do the job better. The question isn't just about which one will make you rich. It's about which one will keep you alive when the global economy, as we know it, ceases to exist. To understand the coming storm, we have to look at the cracks already forming in the foundation. For decades, the global economy has functioned on a print-and-pray model. Central banks have flooded the system with liquidity to solve every crisis, from the 2008 collapse to the 2020 pandemic. But this strategy has a terminal expiration date. When a currency loses its value, it doesn't just happen at once. It happens slowly, then all of a sudden. We are seeing the all-of-a-sudden phase begin. Inflation isn't just a buzzword. It's the sound of your life savings being quietly siphoned away. In this environment, the search for a hard asset, something that cannot be printed into oblivion, becomes a matter of survival. Gold has played this role since the dawn of civilization. It is tangible, it is scarce, and it requires immense physical energy to extract from the earth. Bitcoin, often called digital gold, mimics these properties but replaces the shovel with the silicon chip. It is the first time in human history that we have a form of wealth that is both teleportable and mathematically impossible to inflate. The story of gold is the story of humanity's resilience. In every major collapse, from the fall of Rome to the Weimar Republic, gold was the bridge that carried families across the abyss of poverty. The German paper mark became so worthless that people burned it for heat. Those who held gold coins could still buy houses. This is because gold has no counterparty risk. It doesn't require a bank to authorize a transaction or a government to vouch for its value. It simply is. In a total economic collapse, where the power grid might flicker and the internet might stutter, gold remains a physical constant. You can hold it, hide it, and trade it in any corner of the planet. It is the ultimate reset button. However, gold has a massive Achilles heel in the modern world. It is heavy, difficult to transport, and nearly impossible to spend in a digital economy. If you need to flee a collapsing country, carrying 10 pounds of gold through an airport is a recipe for disaster. It is an analog solution in a world that has gone completely digital. Enter Bitcoin, the 21st century's answer to the gold problem. Born in the ashes of the 2008 financial crisis, Bitcoin was designed specifically to survive a systemic failure of the banking sector. Unlike gold, you can carry $1 billion worth of Bitcoin in your head by remembering 12 simple words. It is the ultimate exit strategy. In a world where governments might seize bank accounts or restrict capital movement, Bitcoin remains censorship-resistant. No one can freeze a Bitcoin wallet, and no one can print more than the 21 million coins hard-coded into its DNA. For the younger generation, Bitcoin isn't just a speculative asset. It's a lifeboat. During the 2025 market volatility, we saw a fascinating divergence. While traditional stocks plummeted, Bitcoin's network continued to process billions in transactions every hour, unfazed by the chaos of the legacy system. It proved that it could operate entirely outside the jurisdiction of central banks. But Bitcoin faces its own existential threat: its reliance on a functioning digital infrastructure. If a collapse is so severe that it takes down the global internet or the power grid for an extended period, your digital keys become useless. The hidden angle that most people miss in the Bitcoin versus gold debate is the role of central banks themselves. While they publicly criticize cryptocurrencies, they are quietly stockpiling gold at record levels not seen since the 1960s. Nations like China, Russia, and India are de-dollarizing, moving their reserves into physical bullion as a safeguard against Western sanctions and a potential dollar collapse. They know that in a Game of Thrones-style geopolitical shift, the one who holds the gold makes the rules. Simultaneously, we are seeing the institutionalization of Bitcoin. With the approval of Bitcoin ETFs, the world's largest hedge funds and pension funds are now plugging into the digital gold narrative. This creates a paradox. If the next collapse is a slow, grinding decline of fiat currency, Bitcoin's portability and growth potential likely make it the winner. But if the collapse is a black swan event, a sudden, violent breakdown of civil order and infrastructure, gold's physical presence gives it the final edge. Why does this matter to you right now? Because the window for preparation is closing. We are moving toward a bifurcated world where your wealth will either be inside the crumbling system or outside of it. Gold and Bitcoin represent the two exits. Gold is your insurance against the end of the world, while Bitcoin is your insurance against the end of the current financial system. One is for the preservation of what you have. The other is for the liberation of where you can go. The most sophisticated investors aren't choosing one. They are using both to create a barbell strategy. They hold gold for stability and physical security, and Bitcoin for asymmetric upside and cross-border mobility. As we head into a period of unprecedented fiscal instability, the safe move of keeping money in a savings account is becoming the riskiest gamble of all. As the dust settles on the next great economic shift, the winner won't be determined by a ticker symbol or a price chart. The survivor will be the asset that people still trust when they trust nothing else. Will we return to the soil and the shine of ancient metal, or will we ascend into a new era of mathematical certainty and digital freedom? History tells us that gold never goes to zero. But technology tells us that the future is never written in stone. It's written in code. The next collapse will not just be a test of our wallets, but a test of our collective imagination. In a world where the very definition of value is up for grabs, perhaps the most valuable thing you can own is a bar of gold or a bit of code, but the knowledge of how to use both. The storm is coming. The only question left is, which shelter have you built?